All right, so VTI or VOO. My man Ted from Maine writes in. He goes, "Hey Josh, help me understand the case for VTI over VOO." And VTI is a total stock index, the ETF that Vanguard has, and VOO is the S&P 500. Over the long run, seems they provide essentially the equal returns. My thinking in current investment is that the S&P 500 VOO, which I think is slightly less volatile than the total market. My personal concern is managing behavior of selling when there's a great downturn in the market. Intuitively, it seems that there'd be slightly less volatility in the S&P 500 given they are large caps versus total market that holds much smaller companies. All right, yeah, I mean, we don't know. I just showered, man. I gotta get my wife to cut my hair. Look at that! Look at that mop. Jeez Louise! All right, so the issue that I think Ted's thinking too much into this. Remember, VOO is 70% of VTI. All right, so we know for a fact that VTI is all inclusive of VOO plus the NAESX. Is that the Vanguard Small Cap Index? I don't. That's the Russell 2000 though. Plus the extended market index. Off the top of my head, I can't remember what the extended market index at Vanguard was. USAA, it was US mix. I remember that. USMIX. I don't remember if that's still the case. But anyway, so we got the Wilshire 5000 is a total stock market for the U.S. All right. Of the Wilshire 5000, 70% of that is the S&P 500. Then the other 30% is the extended market, which would, in theory, cover 4,500 of the Wilshire 5,000. So 4,500 stocks comprised of the extended market index of the Wilshire 5,000. 500 stocks is the S&P 500, which comprise the remainder of the Wilshire 5,000. In this day and age, there isn't 5,000 stocks. I mean, I think it's like freaking 4,200 or something like that, because all these companies are going private because they simply don't want to deal with Sarbanes-Oxley SOX. They don't want to deal with Dodd-Frank and all this crap. So they're saying, I'm just going private. I don't want to deal with quarterly earnings calls and all. It just, man, Trump was right. See, he was just right on. He wanted to get rid of the quarterly earnings calls because it's stupid, man. You go every year for sure, because quarterly, all you're doing is you're giving incentives for mismanagement of companies. Say, look at us, we had growth quarterly. And there's my wife. You hear the video. He want me Anyway, so what happens in VOO is that you're getting the S&P 500. Presumably that'd be less volatile for sure, but not much. At the end of the day, we want, in my opinion, we want the small and mid-cap companies too. It's just for more diversification. Yeah, you'll probably get a little bit more volatility. I mean, at the end of the day, if you get a standard deviation 19 versus a standard deviation of 17, yes, it's less volatile for VOO, but it's kind of like what I always say. No one ever sits back and says in 2008, my portfolio was only down 33 while yours was down 37. Not one person said that. So it's kind of like you take your lumps, they're gonna come. If you're down 19% versus 17%, you're down 35% versus 33%. It's all the same thing. So I would just say go with VTI, cover all the bases. And frankly, if you look, there is something to be said about historically. There used to be, who knows, those continue on, a small cap premium. Small caps, because they're more volatile, i.e. they're more risky. The riskier the asset, the higher the upside is the theory behind this, which is why value stocks outperform typically, because value stocks are riskier. Small cap stocks outperform. Why? Because small cap stocks are riskier. That's just why. And so they're riskier, i.e. they're more volatile. So I go with VTI, but if you want to just cover your base, I think we're nitpicking and say the volatility, and I'm not bashing Ted here. I'm just saying the volatility of VOO being that much less than VTI. Nah, it's not worth it. In my opinion, you can do whatever you want. It's completely up to anybody else. But historically, small caps have done out better than large. Will that continue? I don't know. Is it worth the extra volatility? Yeah, I think so, because the extra volatility, there's water on the bridge once again, I don't know what happened in March versus VTI versus VOO, but I imagine it's pretty doggone close, and they both got trounced, and then they both came back up. Yeah, hope this helps. Thanks.